All right, all you devils out there, happy Friday. Sam here with you. We're just a little bit past noon for me here in Austin. So, of course, we're going to get an update here on Bitcoin. We'll take a look at Ethereum and the S&P as well, just kind of sticking with that trio. So just a little housekeeping first. I know we were threatening to do this here, but we're very close to launching the new website, and that'll have some new options, new opportunities to access the belt system in different ways, and some lower cost options for you. So that is very close to coming. I think we're going to try and move the domain over this weekend here. So fingers crossed that goes well. And I'm going to use that as a segue to just remind you guys, and members got a whiff of this yesterday. Yesterday, first thing in the morning, one of my team needed me to. We needed to get something to edit a PDF file, so I downloaded a product that I had used previously, but for whatever reason, when I downloaded it this time, it downloaded in addition to, often they'll add in a few of the little nuggets. Well, it did something to my whole Windows boot cycle to where I could not boot Windows. I couldn't. It wasn't that the hard drive was the problem. It's just something was corrupt in the process, and Windows couldn't complete the loading cycle. So after fussing with that and swearing at my machine for 2 hours, finally called a friend who came to the rescue here, and we had to put in a new hard drive. And fortunately, and my point here is that I had backed up the entire hard drive. So rather than losing everything but the document data, I was able to recreate the entire hard drive. Now, it took about 7-8 hours to do the whole thing. And of course, I have a lot of video on this hard drive. But just a reminder, back your shit up. Things happen, as they say. All right. So, boy, was I relieved to have everything backed up. So just a reminder, if you're not doing that, it's so easy to do, and you'll be so glad you did if you ever have a problem like I did. Okay. Whoa, God. Anything else I have to mention? Oh, I think, as I've kind of been threatening to do here. And James M., my sensei James M., beat me to it. Eventually, we're going to we'll start doing live streams. And, I guess I'm going to get on camera here as we go into March here with the new. I'm just kind of tying it all together. New website, new opportunities with the belt system. Live streams back on. We'll do them at least twice a week. So all of that coming, and just kind of getting positioned for all of that is a little trickier than you think. So that's an update there on stuff that's coming in the next, I'd say, week or so. So with that said, let's dig in here. I'm on BitGet, right? So you guys know that's our preferred exchange. They sponsor the channel. We appreciate that. And I gotta say, they're really doing a lot of new things and really stepping up. That this is an exchange. If you're looking or want to diversify to add another exchange, this is one to look at. We're very pleased with it, and again, they continue to innovate and offer new products on a very regular basis. So, just a little mention from our sponsor, right? It's a really high quality exchange and a good team of people behind it. Okay, all that said, Bitcoin taking a little dive this morning. Likely, this is all tied to question marks around regulation. I mean, that's you got to attribute to something, right? It could just be whales dumping. Who knows, right? But whatever here, there was a little bit, and we from where we left off last week, there was a little bit of a hopium trade in here that, was right about here. We had a golden zone. It was like, maybe we get this was kind of a maybe. Are we going to get an extension? Get out of there. Are we going to get an extension in the fifth? A little bit of a hopium trade. But it was worth considering. It's very low risk. So here, just to draw it back up, just to review here. Right. So this was the thinking here. So as we see, this should surprise no one, right? A perfect tag here of the golden zone. I might get it pointed in there correctly. I mean, literally tags the 65. And so it was and actually, I think I was, I think last week I was looking at a 4 hour. I mean, a reasonable play. And, was there some profit here? Yeah, there was a little bit of profit there. I mean, more than a little bit, but you didn't get to target, right? Target is way up here. So, if I put the full suite of tools on here as I bring this back here, because this is a template that that I've been using. It's similar to stuff that we do over on Ninja. So let me get the whole thing put back to here. I can just do this, use the Gann high-low. So as we flipped here, you see the Gann high-low, we're breaking those pivots. There was a potential here for this as, come here. As this started to go here, we got the RSI, across the midline. We had signs of volume here, a little bit mixed here, but there was maybe we get a runner. So that was the thought, that perhaps, because you could see it. Okay, here's a swing. Well, here's a little bit of a funky finish to it, but 3 down into a golden zone, potential golden corner, right? That's a trade you want to take, right? I mean, the idea would not to be, YOLO there, right? You don't want to put your whole account into that trade, but I mean, pretty reasonable potential there, right? I mean, it's a trade we've seen hit target, many thousands of times. Well, of course, remember, and this I think I try to make a point of always reminding people here. Always an algo on the other side, right? So for any move to hit target, right, it's going to have to break the counter algo. And what did we run into, right? We ran into the sell side right at the 50, right? And you also had what you can see here, that's Sonar Labs, right? That's our favorite SMC tool suite for TradingView, right? So we run right into this order block here, or supply zone, call it what you like. Bang, right? And kind of you're on the edge here. We talked about this last week, right? You're right on the edge here in the volume profile here. If they're going to pivot, often it's right on the edge. And that's kind of what you got there. So sell side won the battle, right? It's just a fist fight between algos. Here's a golden zone. Here's a 50. 50 takes it, and 50 gets to target. Right, and notice it's getting to target right here in this demand zone. Now, it doesn't look like it's finished. So as we here, I guess we can take this off now, as I'm going to back up to that 8 here. It looks like this was, maybe there was a kicker here. It looks like we're going to have to plant the 5 there. I think we're too far here to be trying to do this, right? This has a nice look to it here, rather than think, that's not done and there's going to be another leg here. I don't think we want to try and connect this to this completed impulse here. Looks like we're done here. And now, which was always the more probable trade here, right? I think we had made that pretty clear, right? That with a completed 5 here, because of the funky finish and the golden zone here, again, was there a trade there? Yeah, there was a trade there. This was the higher probability here that we were going to come down here and retrace this, and here would be the more typical, right? Not required, but the more typical location for that retracement, right? If indeed this is a 1 and we're going to do a 2 down here, if, heavy emphasis, if, we don't know, we never know, right? But the probable location here and the probable path here was completed impulse. All right, let's correct it down here, and then do we get a rip coming out of here? Right, we get a clear target. Now, we're not there yet, right? This has not happened. The market is never under any obligation to do anything, right? It's going to do what it's going to do. We're just trying to, see if we can identify patterns that are prone to repeating, not because they're magic, as you hear me say this all the time, because people do the same things over and over and over again, right? Fear and greed, right? That's what moves the markets here as people respond to volatility. Oh, shit. Oh, greed, fear, greed, fear. It's the same thing. That's what creates the waves. All right, so as we dig in there, let's go from an 8. We're hitting. I mean, there's potential here for a little kickback, which would make sense per the count. So let's. I've been working with a 3-hour lately. Sometimes, everybody works the 4, so every now and then I want to take a peek at the 3, see if there's a little head start on anything. Right. So it doesn't look like we're starting into a 5 wave of an ABC to go into a deeper correction. Now that's at this moment in time. Remember, an Elliott count is just a snapshot of. A moment in time. Right now, as we sit here looking at this, it would appear at first glance here that we've got a 3 into a W and then a 3 into an X, and it looks like we're starting an A wave here. Looks like that's got not quite done yet here. Let's go in there a little further here. Maybe I'll go to a 2-hour. Doesn't look like it's done. All right, so it looks like you've got a contender here for this to go ABC into a W, ABC into an X, and then 1, 2. Looks like we're subdividing here, and there's another impulse here, which just gives you more conviction in it. If you can work the subdivisions out and they align with your analysis, it just gives you a little bit more. Oh, okay, I've got the 1, 2, and then I've got a completed impulse into the 3. So as we're coming down here and tapping this potential, right, it's always just potential, this potential demand zone, perhaps that's the little kickback to give us a 4. We come down for the 5, go to the next demand zone, get a reaction there, right? So you're just laying out like, okay, do I know this is going to happen? Of course not. Of course not. Nobody knows what's going to happen. But is this a path here that would be logical based on prior patterns and how the market tends to respond? Well, if that were the case, it would look like we would be having a bigger ABC here to finish, and maybe we're going deeper. We'd have a bigger ABC than what we started with. But it doesn't look like it's 1, 2, 3. I mean, could it be? Oh, I don't think so, because this already, that looks like a triangle. You can't have a triangle in the 2, so you got to kind of squeeze in there a 1, 2, 1, 2, 3, 4. Looks like you've got this completed here. You might have been looking for a little more, but with this coming off of it, right? And then again, add in, I think this one, you had a slight break here. We had wick break here, so you go back here, and now we're 50 to the tick, and then there's the target. So, I mean, you could have looked at it either way, right? So you got nice confluence here, wick only squirting through here, just probably just running stops there, right? So what stops are they running? The stops that are sitting right there, right? They're running these guys, right? Little liquidity grab, down it goes. All right, so let's get that one out of there. It looks like this is based on this, right? That's how we can identify the algo completing. Now it doesn't look like we're done here with this move, but you'll note here. So if I draw it up, I didn't want to do that. Let's get you out of here. It does look like we're working on a bigger. If this is going to go, with A, B, C, right, a lot bigger than the first one. So that's the only thing that gives you a little bit of pause, right? All right, okay, WXY, that looks okay, but the first ABC. I don't see, it doesn't look good enough to me to want to change that. This looks like the most probable count as we sit here. This clearly being a 3, you got the B and you got a straight shot ripper for the C to give you the X, and then it's technical at the 50. I mean, there's a lot of confluence here to suggest that this is the current count that's in play. Now, of course, all it takes is one rip, one move out of here, and you're rethinking the whole thing. But right now, it looks like path of least resistance is lower, and that's in sync with the larger count, which means, okay, we're looking for something down here because that's the more probable location for the wave 2, if it indeed is going to play as a wave 2, right? No reason not to think that it is right now. Well, pardon me. I should correct myself there. When we look at the bear count, which I'll pull up in a second, there is a possibility here that we've double topped here and that something else is underway. Now, as to how it's starting here, I suppose this could be, we could have some sort of a diag going. So we'd have a 3, 3, maybe we get a 3 here. So we get some sort of a diag here, assuming we get the overlap of the one wave to start out a more bearish scenario here. But I don't think we need to go there yet until this golden zone breaks. Then we're going to have to rethink that. But we'll take a peek at it just so you can see it. I've shown it to you before. Anything else here? No, let's see here. This is worth noting here. Look, the big hole we have here, and all I've done is just go from swing low to the swing high. Well, I think I used this one, the swing high here, to get all the volume here. And we got a pretty big hole here. So if we're going to break, well, I might do it this way, right? So if we get it over here, there's always two ways to draw these, right? Some people like to just focus on the low volume node for a potential reaction, right? So we could have the reaction there, but that can't. You got to look at it in really what we're talking about is the high volume node. It's getting to the edge of it here. So as long as you're clear on what's actually happening there, then you can do it this way, understanding that it's the ledge of the higher node here, and then as we get to the next node. So if I was going to draw it again, you'd do it like this, right? So you'd have the secondary ledge right there. So you can see a lot of potential support down here. Well, here's an anchored VWAP from the low. Oh, here's the 50 in the golden zone, right? So we know there's going to be an algo participating here. We've got a couple of fair value gaps here because of how quickly we move, which is why you see the gap here in the volume profile. So there's potential for this certainly to, kick and hit the B, and then we're coming down here looking for support down here. Maybe it's low volume, maybe it's the golden zone, maybe we finish here with a clean 5 and we have some divergence, all the things that we're looking for. This would, the anchored VWAP would probably roll over a little bit if we're coming down that hard and that fast. But we don't need to quite just assume it just yet. Right now, what we can say with certainty is that we have a pretty good break here, right? So despite the reaction here, and we've gone to target. Now, what's next? Well, there's not really anything to pull from until, this is a secondary pivot and that's broken. So you've got nothing until you get all the way down to the last pivot low. All right, and that's kind of putting you're kind of right back into all of this. So this area from, let's call it 20 to 18, we'll call it 19 and change. From 20 to 19, this $1,000 range here, I'm on a 2-hour here. 20 and change, 19 and change here. Looks like if we're going to come down and correct this, that's the area to start looking for a reaction for a long. Now, what do we look for, right? So the safest thing to do is wait for a higher low, right? Now, some people will say, oh, that's enough. Now what happened, right? You got a lower high. So other people will say, I want that higher high. Then if it comes back down, right? And that's more traditional market structure or smart money concepts on the assumption that, here, let me draw it this way, on the assumption that it took muscle, right? It took volume and bullish sentiment to drive it to give us a new high. So if it comes back down, right, and this is in all the SMC stuff that we teach as well as others, likely, right, there's unfilled orders here, and you'd have a demand zone here as they would look to kick that higher. So, you want to be comfortable, right? The idea, and that's why we use indicators, right? Isn't that why we all use indicators? I want something to give me a little bit of confidence rather than just, okay, it's there. Okay, it's at that location. Well, okay, nothing says it can't break and just keep free fall, right? So we're looking for a little more, something to help kind of lean into a little something, so that's why something like this can be useful. Let's open it up here. So one thing I did, because I had people commenting here, well, we're still in a squeeze, and what's the difference between this squeeze and that squeeze? I just simplified it here. So we're just looking at the classic TTM squeeze, right? Bollinger inside of Keltner, both at 14 periods, so we get a 2 standard deviation and twice the ATR of a 14 period Keltner. So these are true squeezes, right, where we get that lack of volatility, and then, as is always the case, from that contraction comes the expansion. So, but that's the idea here. So if I zoom back in here, if we get to, I got a lot on here now. If we get to a location down here, now we're going to look for some confirmation from the indicators. Now, of course, the indicators are always going to lag price, right? Because they're just a derivative of price. So you have to recognize that if you're using an oscillator, or pardon me, an indicator, this happens to be an oscillator. If you're using something like this, it's going to lag price. So you're likely, unless you just got lucky on the timing, not going to get the tick low. But that's never your objective, to try and get the tick low. That's not the goal. Oh, I nailed the low and put it on Twitter. Look how smart I am. That's never the idea. The idea is you can get 60, 70% of the move, the middle of the move, you'll do just fine. All right, so don't get all caught up in, and a lot of people, especially new traders, they're trying to jump the gun here, right? So it'll come down here and they're like, oh, I see the 5 is finished, and I'm going to get the pivot. And then up, right? And then they just get hammered there. You don't need to get the pivot, right? And I think sometimes the thinking is, well, if I go early, I'm going to risk less. Well, that's true. Well, something to remember, a little saying that ought to be in your ear whenever you're thinking about doing that. Buyers at lows create new lows. Sellers at highs create new highs. Now, why do we say that? Because if you're buying the low, you're putting your stop right underneath the pivot. If it comes back down, your stop is the fuel to new lows, which is why buyers at lows create new lows. So, and trust me, whales know that, right? So if you do that purchase down here and you just kind of, well, let's take a flyer on it, right? There's no question there's going to be a bunch of stops here. There's no question. So if, right, this is the trader's conundrum. If they can get it, fuel to finish, right? So you could see, 3, 4, now I got the 5. If they can't get it, right? Because it's so obvious. If they can't get it, then the bulls are stepping in here to prevent that. Now I got a higher high. Okay, now I got a little more than, is this a little baby? Is this a little higher low? Maybe I can just run off of that. Well, okay, in this scenario, maybe you got a little one. Now, would that fit here with the Elliott count? Right, here's where the Elliott can be useful. Wait a second. That doesn't look like that's a completed, it doesn't look quite like that's a completed impulse. I mean, could it launch from there? Of course. Market can do anything at any time. There's never any obligation to complete a count or hit a measured move. But look, 1, 2, 3. It looks like, right? So what we're looking for is if we can get it all to line up, because it happens. If you're patient, if I can get this and come into that 4, now am I thinking right there? Higher high, higher low. Well, yeah. Now you got to make a decision, right? So the question is, wait a second, that's higher high, higher low. Do I want to be a buyer? Well, okay, right off the bat, wouldn't you maybe hesitate just a little bit? Look at the fair value gap here. Right? And see, that's where you got to put some confluence together. You got to put a few things together. Come here, right? So, I'd probably draw it this way, right? Because this wick rejection here, something like this. Now, we bring it over here. We're on the edge here. Here's a low volume here. We're right on this is visible range, right? So what can we see here? So if I see it here, I don't necessarily want to go balls deep and go, I got a higher high. We're going to the moon. Think about it. Well, this is probably a little fat here. Let's make it a little more realistic, right? So if we got something like this into that 4, okay, let's see if we can put something together there, right? And this is the process, right? It's always a process. Let's get the, what do we got here? Let me get a true measured move on there. Actually, I'm going to use, where are you? Wave 4. Okay, so here's where I'm looking for that wave 4. Now, this is, to the non-Elliott trader here, or retail, or the inexperienced, right? They might look at this and go, high, low. I'm going heavy. Now, could you get away with it? Of course, right? Of course. But is that the trade you want? I would suggest maybe not, because all you've done is this thing is teed up to come down and to finish the 5, right? That's what you're. Here. Let's see. 3, 4. Do I have you all here? 3. Got the wrong 4 here. This 4 has to go over here. Okay, so 1, 2, 3, 4, 5, all nice and self-contained. Remember, it's always better if they stay in this kind of alignment, right? That's what I'm always looking for. Again, not because I have any magic gift for it or anything. Other than I've just seen this for so many impulses. I want them all nice and tight. I don't want to try and connect something like this to this, right? So this, if I got this, is correcting this impulse, right? So the 4 is right here, and that's right about the time that retail tees it up and says, time to get long. Little stop run here, liquidity grab right into the big fair value gap. They've never heard of a fair value gap. They buy it hard, and what happens, right? It just completes the pattern, right? This happens over and over and over in the market all day, every day, right? Now, what happened? I thought it. Right. Now, so then you're down here going, okay, there, I waited, I was patient, it came down here, it completed. Okay, what did I complete? Well, again, if I didn't think it was going to help you, I wouldn't spend so much time on the Elliott wave. I wouldn't have built courses around it or that feature it, although it's not the only thing we teach. It just happens to be something that requires a little bit more education to be able to apply it effectively. Let's get you out of there. Okay, so now you're sitting here looking at the 4, and it comes down. Let's just assume we get this to complete. Okay, 4 here, 4 for the 5. Okay, what did I just complete? Well, could it be 1, 2, 3, 4, 5? Could it? It looks like, I suppose it could, right? It looks like it's long enough here. Could it? But God, does that look like what you've got there? Does that look like some sort of, Yep, you're just long enough here. That doesn't look like a 3, really. It just looks like it looks like a WXY. So that what we're waiting for is the next ABC to complete. Now, could we be, the Elliotian or me or whomever, be wildly wrong about this? Absolutely, right? The goal is not to be right about the Elliott count. The goal is to make money. So if you're down here and you were looking here for the long, well, be realistic about how far that can go. Now, could you take out the highs? Of course, right? I always have to say that because I'm not saying, oh, well, it'll never do that. But if we're down here, what you're looking for is the next 3 to give you the setup for that's what you're looking for at this moment in time. That's it, right? Sharp double. ABC, 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 right? WXY. Correcting this, pretty clear impulse. That's how you're putting that together. That's how you're using the Elliott to guide you, knowing that you very possibly, all it takes is something to invalidate and you got to rethink the whole thing. But then you're rethinking it based on rules and guidelines. And you're like, okay, oh, wasn't that? Oh, all right. Well, it's a good thing I didn't YOLO in there and just take a flyer on something here and risk my entire account. I was strategic about it. So back to the point here I'm trying to make. Let's get you off of there. When you get here, the move here is not necessarily, oh, okay, well, I've completed the 5. If I got here, okay, now I've got something I can work with here because I've got a target up here, so I can put together a trade that would make sense. Oh, where are you? All right, so I could put something together here that would make sense. Say, oh, okay, well, all right, maybe I can do something like here. I can get 4 to 1. Because I know I'm going to be wrong way more times than I'm right. So the risk reward has got to be favorable and allow for that to still be profitable. I've been saying this for 5 years, right? This is the trade you want, not this. You don't want to be the hero down here. Buyers at lows create new lows. Remember that. It should be, if you're thinking about it, I hope that goes off in your head. Oh, what was that thing that guy said? What, buyers at lows? Was it buyers at highs? No, buyers at lows create new lows because your stop is sitting there and everybody on the planet, every trader on the planet knows that. And those with the muscle, right, to go get it, if they can, they will. If they can't, creates the C of the B. Now, here are you thinking, oh shit, new highs are just around the corner. Maybe not, right? Okay, so look here, just based on the channeling. Do you want to buy that? Maybe, right? I mean, it could happen, but my suggestion would be, if it's going to break here and we're going to start to invalidate the prior count, okay, well, wait a minute. If that's going to happen, I'd like to at least come down and see that breakout get tested from above. Now I'm buying the retracement. At least it's on sale as opposed to paying full retail up here. Whales never, ever, ever pay retail, ever. They don't have to, right? They'll drive it down if they want to buy it. So why do you want to do the opposite of what they're doing? Hello, right? You don't ever, right? But now, do we know what they're going to do? No, but they leave footprints, right? That takes some muscle, right? Somebody had to dump here, right? And then stops get triggered and liquidations happen, and eventually, okay, it bounces. Now, what's next? All right. Well, if you're going to take them, you got to be strategic about it. Oh, here, a little low volume here. So I'm on the edge again here of what would be this block here. Oh, okay. When I can come back down here. So, maybe this, because very little business, you can see it. Look at here. There's very little business done here. So this would be a potential support zone because traders know if it gets through that, we're likely coming down lower. We're likely going POC down here will be a magnet. And then, wait a second, something deeper is coming. Because all the potential support, demand zone, POC, prior low, demand zone, if that's breaking, bears are in full control. So you gotta be strategic about it. It's like a chess game, really. You gotta think, okay, what are the tools I can use here? And people don't like to hear that. What do people want? Oh, fuck, man, just tell me where to buy it and where to sell it. Jesus Christ, man, just give me the answers. You'd be shocked how much of that I get. oh man, don't make me learn this shit. Just tell me when to buy. I mean, there's no shortage of those kind of Discords and memberships out there that are going to tell you that. How does that serve you? Right? That was never our guy. I've been saying this lately. How is that benefiting you? Right? Maybe short term, but then you're entirely dependent on someone feeding you trades, right? That was never our goal with Trade Devils, right? The goal was to give you independence and teach you this, so you didn't need me to say, well, check that out. Now, there is certainly value in exchanging counts and ideas. I do it with my team all the time before every Bitcoin Friday for the last 5 years, because I've got really talented technicians on my team. And I say to them, what do you think? What do you got? What do you hear? This is what I'm seeing. You see something differently. Right? We kind of collaborate, and collectively we come up with the most probable count, as we did today. So I'm just kind of walking you through here saying, think, man, think. Where's the low risk place where I can get in with where the potential is there, where I'm not going to buy right into a fucking golden zone here, because that's what retail does, because they don't know it's there. They don't know. They don't understand how volume profile works. Now, maybe they'll get there. Maybe they're new to trading, right? But you need the... It sounds horrible and crass to say it this way, but you need the naive to be in the market, to move the market, because they make the wrong decision at all the time that gives the people that perhaps have a little more experience, I'll say it that way, that know where their stops are going to be liquidity. We need the naive. You need the naive. What you're trying to do is transition from naive to experienced, and you got to see it. It doesn't come easily. It's not like, oh shit, man, I want 6 months in. God, I see people. It just amazes me what I see on YouTube. Everybody with a fucking a TradingView account has got a paid Discord now. It's unbelievable. People have been in the market for 3 months. Oh, join my group here, and we're making nothing but money, right? Somebody who caught a move like this, and oh, look at all the money I made. Well, join my Discord here, and we'll give you the trade every day. It's just amazing. It's from 5 years ago when I started. And every fucking one of them has that stupid fucking O face on their thumbnail of their video. I wouldn't click that if you paid me. That is so insulting to my intelligence. I refuse to click that shit. If you're clicking on that, if that's what it takes to bait you into clicking, you're on the wrong channel, my friend. You're never going to see that from me. You're going to see me next month, but you're never going to see oh my God, Bitcoin sold off. Oh, palms on the cheeks. God, that fucking pisses me off. It's so insulting. It's so fucking insulting. If you're clicking on that shit, you're a moron. Okay, off my rant. You're not a moron. You're just inexperienced. You're just being suckered. Plenty of sharks out there. All right, let me calm myself down. I saw a shitload of them today, and it just makes me want to gag. You might get a gag face from me. All right, let me get back on track here. I think I made my point here, right? Look for where there's room. Consider the patterns. Consider where the support and resistance is. You can simplify. This is complicated. I get that. I like the complication. Some people are like, Jesus Christ, man, can I just have the support and resistance? Plenty of people trade successfully that way. Plenty. You got to like the puzzle here. If you don't like the puzzle, I'm not your guy. Wrong channel, wrong team, wrong Discord, wrong membership. All right, let's go. Ethereum is pretty ugly. Oh, let me pause for a second, pull up the right chart. All right, here it is. It's kind of the same thing with Ethereum. This has been kind of floating as like, okay, maybe we got a kicker here. I think at this point we got to put the 5 in. Just draw it yourself, right? It just looks, I know, right? I wanted that to be it still might be, but it looks more like that's what we've got. Like we completed the impulse. That's what it looks like, right? So it's kind of what I was saying before. This doesn't look like it's connected to this impulse, right? It looks like it's the correction of it here, even with the breaking of the channel. This is a cluster F of who fucking knows, right? Can you label it? Yeah, but do you have any conviction in it? No. What can we see and say with conviction? Well, okay, here's a pretty clear double. We created a supply zone here. Is that enough? Well, this is all kind of sideways fuckery, as it's often called. Not a lot of conviction, right? The golden zone from here. Come here. Let's get that back to, right, a little break here. Now, it's wick only, but you've got, so here it's perfect, right? You tag it, out you go. Now, wick only, yeah, but sure looks like there's another leg down here. Here, we label it. It's not too hard to see. What am I on, an 8 hour? Let's go to a 4 here. It sure looks like you could label this as the start of a 5. Right now, again, that doesn't mean for sure that's what's coming, but it sure looks like there's a C to come down in here, get in here, and this is some sort of start on a correction. Could we be done here? It's already, it looks like you got a 5 here, so you're trying to go A, B, C. There's a triangle X. I get it. I know, right? Not everybody's into that level of, holy fuck, look at all this shit. How am I going to know that? How am I going to learn that? Well, if you want to learn it, right, here's what I know. It won't hurt your trading. All right, A, here's an X. Okay, maybe do we finish an A here into a B? Double top on the edge of, okay, it doesn't invalidate. 1, 2, 3, 4, 5. Looks like you got more to go here. Okay, WXY, would we be done? Well, not necessarily. Let's pull it back here. Right, could we be done here? Well, okay, maybe. But if I'm pulling from the low, if indeed this is going to be the 5 high, we're the same as Bitcoin, right? We're looking for it down here where I got this big low volume node. And very little business was done here. That's where I'd be looking for the next big, macro, I guess I'll say it that way. The big longer-term trend buying opportunity would be somewhere in here if we can get the right setup. And it's just as with Bitcoin, we don't want to sit here with a limit order. Okay, what can I get a little micro? Can I get a little micro 5, come down into a 3? Yeah, I'll buy that one. Stop under the pivot, right? It's not complicated. Why? Because if the pivot's down here, again, if they can get it, they will. If they can't, they got a cover. There goes the 3. Right, that's how it works in every Elliott wave pattern, right? Just like down here, the same thing. Oh, can't get it. Oh shit, got to cover. Oh, here come the whales. Up we go. It's just how the market moves, right? It's the same thing over and over and over again. Not because these patterns are magic, because people do the same thing, right? Money's emotional, right? People respond emotionally to either the gain of capital or the loss of capital. They respond emotionally, create these waves. This is a bit of a hurry up and wait. You're kind of stuck. You bumped into the same algo here. This one got golden zone, right? Do you see how, take note here, not the 65. Pardon me, not the 618. It's in the pocket, right? Just shy of the 65, right? Which is why we use the golden zone. All right, so because the retail trader has been told, okay, put your stop just on the other side of the 618. So who do you think got stopped out there? Well, no one who studies my material, right? Because your stop would have been maybe 707, right? Maybe on the other side of the 65 if you're a little nervous about it. But never, there's two things here. One, you don't ever want to enter here, right? The naive will use that, will do because they don't know it's there. They don't know anything about this algo, right? They'll buy right into it, right? And they do on a regular basis, right? Somebody has to trade there. All right. Now down here, let's pull back here. God, I'm all over the place today. Oh shit, I got a lot of stuff up there. Looks like it's got to have one more down. Right, come down here. That could play. I think this is a little bit of a hurry up and wait, but here's the target. So I don't know that I'd be wanting to jump on this, or I'll kind of be curious to see how it handles this demand zone here. If we break through, here's the God EMA, the 200. Right, think of it as just the 200. Coming down to that would make sense. Now, what are we completing there? Perhaps not the 2. Maybe. Could be the 2, right? Nothing says it couldn't be, but you're probably looking at a double there as well, right? So, oh shit, if we get this, there's the WXY. Kind of, you're looking for it down here. X, A, B, C, and now we go. All right, how am I doing? 38. So much for shorter. All right, hang on a second. I'll bring up the S&P. All right, here we go. S&P, this is an 8 hour. This continues to be, it's elusive, right? So if you're tracking the shorter term stuff like we do over with our day traders here on the Ninja side of our business, just when you think you've got it, it rips back the other way. And it's been very tricky to trade. All right, so this... Right, so you got this, it looks like a 3, but then this looks like a 5. It's very, very tricky to get a handle on it. But what we can see here is the Elliott will every now and then it'll show itself, right? So here's the 5, right? Let's get that so you can see it a little better. It'll show itself. Oh, okay, well there's a clear 5 I can see. So how do I fit that in? right? It looks like you see it's not a great looking flat because it has the makings of it. Three, you have to squeeze a 3 in there. It's high enough, right? 3, 3, 5. Boy, that's a big 5. But it didn't quite set up the way you were looking for it here. Here's a even that was like 1, 2, 3, 4, 5. Okay, you got to live with that. 1, 2, 3, 4, 5. Same thing. So it looks like a kind of a shitty zigzag here. 3 A B C. I am on an 8 hour here. Let's go. Let's do a 2 hour here. Can you make that fly? 1, 2. That looks pretty good. You'd have to have an internal. This looks. Oh Jesus, that's ugly. A B C into the 4. It's a chop monster, right? It's because the market is so hypersensitive to just the slightest whiff of any change from the Fed. Oh my God, we're gonna have to continue to tighten because labor market's too tight. Oh, maybe, right? Just a little whiff of maybe we'll wait and see, and then just rips. Right? It's just so hypersensitive. Just like as I said before, just a hiccup from the Fed, right, gets the algo's fire. Is really challenging trading. So it's the longer term stuff is tricky in here. Well, you can say that, right? And then you could look at something. I know it's hindsight, right? I'm aware of that. Pretty nice channel here, and then bam, that's just rip city, right? Right to the 200, by the way. And if you look at the daily, the big question mark was how are we going to handle the 200 when we got through it. Right here, we got through it here. Back over. So when it's like that, and you can't really lock and load on the Elliott, like, I got it, I see it. Well, then you got to use your other tools here. This is I've mentioned this indicator before, which I like a lot. You're seeing trapped longs and shorts. Same idea, right? Buyers at highs, where are they trapped? Sellers at lows, where are they trapped? So here, as we look at these guys, well, these guys were buyers. We come back down. They're in trouble, right? They likely have to cover. Now we come back. We're coming right out of a demand zone. Well, let's go down. I think this is it's so hard to trade here out at this level because it's unclear. And let me take those off here just because for the screen real estate here. Pop this up. Well, what are we doing here? I've got a completed 5. That's all. What I can do is say, okay, I've got a 5. This looks like another 5. So the implication would be, okay, perhaps I've got an A wave going in, something along those lines. That's how I'd be thinking, because I got a 5. Now, does it fit? Where does it fit? Well, okay, again, we looked at that. Let me get this off here just to clear it up a little bit. 5. Oh, shit. You're going to have to dig a 3 out of there somewhere. 5, 3, 5. You got a 5. You've got this straight rip here, and then you got another 5 here, and then you got this where it looks like a 5, right? So this is it's not. You wouldn't have a lot of conviction in this because it's just blowing out, and you can see here the algos are getting blown out on both sides here. Don't worry about them, right? They'll be just fine. Algo is getting blown out here, so then we get the big fall down here, which is not technical either, right? We break here, right? You're trying to use the algo that rules the market here, and we got to break here. All right, so as we come back the other direction, well, I'd be looking to pull from all of this, but I'd start dominant to dominant. Get in there. Let's get you out since you're advantage bears. If we tighten this up. Am I right on that shit? Hang on. Can't quite see it. There we go. Okay. Boy. You kind of see a path here, right, to get to that golden zone. Now, nothing says we couldn't just keep going here, right, as I try to remind you guys. The market is never under any obligation to do anything. A, B, C would sure make sense. All right, so we got Friday. We got data tomorrow, right? Is this something scare the shit out of people back up to, we shall see what kind of reaction we get tomorrow. But right now, we got great earnings from Salesforce and, maybe tech's not such a disaster. And, there's always talking heads are going to do, nobody knows, right? So we just try and take calculated risks where we can and try and track this algo because it'll keep you on the right side of the market. I think we looked at a couple here. Oh, Jesus. It'll keep you on the right side. Second target here. Coming down this way, nothing in here, right? It's a mess in here. So where's the next opportunity? Well, here I got supply zones up here. I got a 50. I can just look here as a potential, right, pivot. What have I got below? Same thing down here, right? We're getting kind of hot in the RSI. Do you want to take a trade going into the data tomorrow? Maybe not. Maybe you wait. Let's see how the market reacts to it, and then you can always go to some very, very near-term options to trade that. A lot of different ways to approach it here, but I would probably not be adding positions going into tomorrow. All right, so this is I don't have a good. Oh, okay. Well, here's the perfect spot. I would be watching for tomorrow, because what am I expecting here? I'm expecting this. Now, do we get that? Well, I'll be back next week. We'll see what we get. All right, guys, just a reminder, right? Our goal here is not to feed you. Our goal is to teach you. Oh God, it's so overplayed, but right? Teach a man to fish. Give a man a fish. Right? We're always trying to teach you how to fish. And sometimes, right, there's nothing I can do other than just tell you, here's how to set it up, and we'll wait and see what happens, right? I can't always hand you a fish. All right, guys, hope you learned a little something. Like I said, keep your eyes peeled for a whole lot of new stuff from us. Hopefully we'll get it all set up going into next week, but we shall see. All right, guys, have a great weekend, and we'll be back to you next week.